You've heard the term, right? The starter home. It's supposed to be your first rung on the property ladder. But what happens when that first rung is dangling at $600,000? Today, we're going to dig into the so-called 600K starter home and figure out what it actually takes to afford one. Let's get into the real numbers. And this quote just hits the nail on the head, doesn't it? You've got the real estate world calling these places starter homes, maybe with some laminate countertops and a tiny backyard. But then you look at your paycheck and the math, well, the math just isn't mathing. It's a huge disconnect.
Right, that's the real question, isn't it? So we're going to move it right past the sticker shock and get into the nitty-gritty. What does your household income really have to look like to be able to sign on the dotted line for a house like this without ending up completely broke? Let's find out.
To get our answer, we're not just going to pull a number out of thin air. We're going to do a little reverse engineering. We'll start with that big, scary price tag, and then we'll work our way backward, step by step, to find the salary you'd really need. No tricks, no magic, just some brutal math. Okay, so the key to this whole puzzle is this one simple but absolutely critical financial rule, the 28% rule. It's what lenders and financial advisors have used for ages, and the whole point is to keep you from becoming house poor. And trust me, we're going to talk more about what that means later. So just lock that number in your head, 28%. It's everything. So here's our game plan, and it's pretty straightforward. First, we start with the price of the house. Easy enough. From there, we figure out the true monthly payment. And I'm telling you, it's probably more than you think. And then, using that 28% rule we just talked about, we'll get our final answer, the annual income you need to make it all work without constant financial stress. All right, now this next part, this is where so many people get tripped up. See, your monthly housing payment isn't just your mortgage. No. It's a whole bundle of other costs that can totally sneak up on you and inflate your budget if you're not ready for them. So let's break it down. You've got your basic mortgage, that's principal and interest, but then you got to add in property taxes, which can be a huge variable. Then there's homeowner's insurance. Oh, and if you didn't put 20% down, tack on private mortgage insurance or PMI. And here's the kicker that almost everyone forgets, maintenance. A good rule of thumb is the 1% rule, which means you should budget 1% of the home's value every single year for repairs. On a $600,000 house, that's $6,000 a year, or an extra $500 a month just for when things inevitably break. And look at this chart, it makes it so clear. Only about 2/3 of your monthly check is actually going to the mortgage itself. A whopping 35%, more than a third, is going to all that other stuff. Taxes, insurance, PMI, and upkeep. This is exactly why those simple online mortgage calculators can be so misleading. You're not just paying back a loan, you're funding this whole little ecosystem of costs that comes with the house. So, we've looked at all the numbers, but what's the actual human cost of stretching every last dollar to make these massive payments? Well, that brings us to a really tough reality for a lot of people. Being house poor. I mean, what a powerful way to put it. A prisoner to the bank. Think about that. It means, yeah, you own the house, you have the keys, but you have zero financial freedom. Every spare cent is eaten up by that house payment, leaving you with nothing for savings, for fun, for emergencies, for just living life. And this is what that actually looks like. This is the real, tangible price of being house poor. We're not talking about skipping a fancy European vacation. We're talking about the gut-wrenching stress of having to say no to your kid over a $35 field trip because you just don't have it. That's the trap that so many people accidentally fall into. So, after all the math, after factoring in the mortgage, the taxes, the insurance, the PMI, the maintenance, and sticking to that safe 28% rule, we finally have our number. To comfortably, and I mean comfortably, afford a $600,000 house, your household needs to be making somewhere between $168,000 and $196,000 a year. Just let that sink in for a second. For a starter home, and that brings us right back to where we started, but with a whole new perspective. When the income you need to buy an entry-level home is solidly in the top tier of American earners, what does the term starter home even mean anymore? Maybe the math is telling us that for a whole lot of people, the idea itself is becoming a myth. What do you think?